So what do we consider personal property? So we hear from a lot of small business owners that tell us that they don't have any personal property for their business. For example, Jack has only an online presence and only uses his computer and cell phone to operate his business. And he uses the same computer and phone for his personal use. He thinks he doesn't have to declare those as personal property for his business. Jill called and complained that her business isn't profitable yet, so she shouldn't have to file. Mike said he's doing carpentry work out of his old truck and he inherited most of his tools from his dad 25 years ago. He thinks he shouldn't have to file because they're not worth anything and he didn't pay for them, so they don't really count. Melanie's a hairdresser but only rents a chair at a local salon, but she doesn't own it. Why did she get a declaration? Do these business owners need to file? What is considered personal property? These are the kind of questions that we're going to get into, as well as covering how to fill out your declaration. So your personal property declaration has a lot of boxes on it. If you brought a declaration with you so that you could refer to it throughout the presentation, you'll see there's a lot of different boxes, and it can be really intimidating when you receive that to think that you have all of this stuff to fill out. But we use the same form for all sizes and types of businesses. So there's only going to be a few boxes that really pertain to your type of business. So these are the kinds of things that would be declared no matter the type of business. So furniture, unregistered vehicles, computer equipment, signage, vending machines, leasehold improvements, which we'll explain, tools, machinery, and any equipment that you use in the course of your business to earn income. This is so strange. Okay, leasehold improvements are only applied to commercial businesses and not home businesses. It's commercial building upgrades or finishes that serve the needs of the tenant. So while a property may require both internal and external upgrades for a commercial tenant, typically only interior modifications to that tenant space are considered those leasehold improvements. And they're added as personal property in Code 24 on the form. Any foundation or that's made to the exterior or improvements made to the exterior of the building or anything that serves multiple tenants are considered building improvements, and that value is added to the real estate rather than the personal property of the individual business. Examples of leasehold improvements that you would declare on your personal property if you have a commercial space would be like your cubicles, including the installation costs, lighting, including installation, the build out of new walls, floors, lighting, shelving, partitions, and everything would include the transportation. You might see that on an invoice, transporting the materials to get it there, and then the installation of it. The transportation and installation costs are all included for leasehold improvements. So electrical and technical upgrades in the tenant space and interior and exterior signs. Leasehold improvements that would not be personal property would be like an HVAC installation because it benefits the structure. Enlargement of the building, an escalator or elevator installation, parking lot, roof repairs, things like that that benefit the property, the real estate. So real estate or most anything that's permanently affixed to the land is not going to be part of your personal property. Registered motor vehicles, if it's registered in the state of Connecticut, that does not go on your personal property. We'll get to motor vehicles in a moment. Now, there are exceptions to the permanently affixed to the land, for example, gas pumps. They are affixed,
How does that happen?
Pressing buttons.
I didn't press anything.
I did.
Oh. Okay. So disposals are really important. So if you don't have something anymore, you need to let us know that, because otherwise we will carry that forward in your totals and you're going to continue being taxed for something that you no longer have. So when you dispose of something, you want to record it under the disposals list on the form, which we'll show that to you. The value of the disposals comes off of the year and code that they were originally acquired and reported on prior year forms. It's important to declare disposals, as I said. If you don't declare your disposals, if you don't list them out and categorize them and itemize them as it indicates on the form, but you would have subtracted it from your value of things that you do have, we're going to go back and look at last year's form and compare to your current filing, and we're going to see that there's a mismatch. We're going to carry forward last year's numbers if there's no disposals listed. So we're going to assume that that's a math error, because you might have 20 items listed in that year and we don't know the value of each item. So we wouldn't have known what to subtract out unless you listed in the disposals. So it's really important to do that so that your data tracks with our data. So we'll have another reminder about disposals in a little bit. Dispose means you no longer have it in your possession because it was sold or discarded. If you still have it, but it's no longer in service, you still have to record it as, you still have to declare it as an item you have. This is what the disposal section looks like on page 2 of the short form, or page 4 if you have the long form. So you would have the date removed here. You see the mouse on this? No. The date removed would be the date that you sold it or disposed of it. The code is what box number that you had it in. So like maybe 16 or code 20, a description of what that item was, the original date that it was acquired. So what year you had it listed in, and that original acquisition cost that you would have removed from the original code. I know that is a little bit confusing if you are not used to filling this out, but I'm sorry if it's a little overwhelming, but we'll go back over it a little bit in more detail. So how is your assessment calculated? So we take the depreciated values of all the declared business assets, and we subtract the disposals, and then we multiply this total by the assessment rate of 70%. So the sum of depreciated assets minus disposals times 70% equals your assessment. So the assessment times our mill rate, which fluctuates annually, is what generates your annual personal property tax bill. Hopefully you're not feeling like that right now. Is this a lot of information to process in one session? Yes, but our staff can help you. You can always call us or email us, and this PowerPoint will be on the website so you can review it at your own pace anytime. You can also email questions to us at personalproperty@manchesterct.gov. We will review the declaration, but let's start with a couple of basics first. The ABCs, real basic. So the declarations are due every year. It's an annual filing. It's due November 1st. Now, if November 1st falls on a weekend, we make the due date the following Monday. This year, November 1st is a Saturday, so we're making it due November 3rd. Not all towns do this, and not all assessors do this. Some will cling to that date, and you should have it in during their business hours on the Friday before. So if there's a different assessor besides me in Manchester sometime in the future, then they might not have the same rules. So you always want to make sure that you know what the rules are, because you don't want to have a penalty. If the declaration is not filed on or before that deadline, there will be a penalty added to your assessment. If it's not received, the assessor's office will estimate the personal property and then add the penalty for filing. So if you don't file, we have to estimate based on what kind of a business you have, what your assets might be, and you probably would rather file than have us estimate for you. And then we would add the penalty. The penalty for late or non-filing is 25% of the assessment. It's a really steep penalty. We don't pick the penalty, and we also don't pick the form that's complicated. These are mandated forms for us to use, and the penalty is mandated by the state statute. Oh, that was nice. So please submit your declarations early. Avoid risking the 25% penalty. Fully complete and sign your declaration, and don't wait until the last minute. We send out more than 3,500 declarations. What percentage of folks do you think decide to wait until the last day or 2 days to file that? More than 20%. And we only have 3 or 4 people on our staff that are primarily receiving and processing these via email, online filings, snail mail, and at our counter. But what if you have questions? What if you forgot to sign your declaration? What if you need help completing your form? If you come in on the last day and this is what your needs are, it's going to make it a lot more difficult for you and for us. So you want to make sure your form is complete. There is a checklist on the back page of the declaration. So you can go through and say, did I make sure I did this? Did I make sure I did that? Did I sign and date it? Just go over that checklist, use it. You would be amazed at how many incomplete or unsigned declarations that then require us going back and forth. And that's just not efficient. And we're trying to create a more efficient process, which is why we're offering this so that we can help you. So this is what we look like on the last day. Help us help you. If you need help or have questions, please just don't wait till the last minute. We don't want to penalize anybody. A is for assessment. The total value of your assets is depreciated, which we already talked about. Always good to review. It bears repeating. We want to make sure you understand the valuation that you wind up with on your declaration is not the amount of a tax bill. It's the amount of your assessment only. It's just part of the calculation for your tax bill. So again, the depreciated assets times 70% assessment rate equals your assessment, then times the mill rate divided by 1,000 equals your tax bill. Oh, that's a cool one. So to try to accommodate everybody's needs and try to get people to submit things on time, we have different methods of receiving the declaration from you. Online filing is the quickest and easiest filing method. I don't think that's available if you're a new business, if this is your first time filing. Is that right, Terry? If you're a new business, that won't be available. But once you have filed once, every year you will have an online filing option, and there will be a code, a unique identifier on the front of your declaration. And you can use that to access your online filing. And it will show you what you filed the previous year in all of those boxes. And then you can just update disposals and what your current year acquisitions are. Terry? They can file the first year online? If there's an access code. Okay. And we have instructions on our website how to do the online filing. and it shows you little pictures of like what each screen is going to look like as you go through the process. So it's pretty easy. And if you have any trouble, you can always call us and we can help you with that. Or if you'd rather, you can just fill out this paper form and you can email it. And your email timestamp is proof of timely filing. It's an easy way for you to retain a copy of what you filed. And if you did the online filing, you also get a confirmation upon filing, and you also get a copy of what you filed. You can also drop it off in person. We also have the outdoor drop box at the back of the building. We recommend that you keep a copy for your records. Otherwise, we charge for the copies. And we can only take cash. We don't want to charge you, and we don't want to spend the time making copies. So make a copy or take photos of it before you submit it. And if you want your timestamp, like a lot of people bring their declaration to our counter and want to see our stamp on it, and they take a photo so it's their proof that they filed it. You can mail it. It's the final method of submitting a declaration. If you must submit via mail, we recommend obtaining a receipt from the post office or another carrier for proof of mailing. It has to be a United States Post Office stamp. It can't be something like a Pitney Bowes stamp from a company. We don't count that. And honestly, we haven't had great success with some of our USPS services. So it is not the most reliable anymore. I would definitely encourage you to use one of those first two methods. But not everybody's comfortable using a computer. So we have the other options. What if you're no longer in business? If you believe you've received a declaration in error, please don't ignore it. If you think, well, I don't have that company anymore, or I sold it, I don't need to do it, don't ignore it. Don't throw it out. You must call us or send us an email detailing why you think it was an error. Failure to return that declaration without an explanation will result in the penalty on your assessment. If the business moves out of town or is sold or permanently closes, please let us know. Of course, we have a form for that. Shocker. There is an affidavit on the front of your declaration. That affidavit says that my business closed or moved, and you can put that information there and send it to us so that we can get that declaration to the proper owner. If your business closed or you moved to another town, we need to know what happened to the assets that you were declaring in Manchester. So saying my business closed and that's the end of the story, it's not quite the end of the story on our end. We have to have a final disposition of your assets. So again, real easy to just give us a call or send us an email to personalproperty@manchesterct.gov and say, what do I need to do if my business closed? And the date that it closed is important as well. Hopefully none of you are closing your businesses. But just in case you know somebody or happens in the future at some point, you know that that's something you need to pay attention to. So now we're going to talk about the declaration and the codes. So on page 3, you're going to complete all of your basic information, your business name, contact information, the description of your business, all the ones that you know the answers to. Really easy. So first, we're going to talk about the most commonly used codes and which types of businesses use which codes and what type of equipment belongs to which code. Code 9 is unregistered motor vehicles. If it's registered it's a vehicle out of state registration, that also has to be declared. If it is in Connecticut more than 3 months, or if it's garaged here, it still has to be declared on your personal property. Campers, RVs, trucks, construction vehicles, passenger cars, tractors, commercial trailers, any car, as I said, registered in another state but garaged in Connecticut, all of those would be declared in Code 9, just giving a description of that vehicle, year, make, model, VIN, and if you have that MSRP, we would need that as well. So ATVs and snowmobiles are only for commercial use that are taxable. Personal use trailers and snowmobiles and ATVs are exempt. Here's your code 9, year, make, model, your VIN number, length and weight depends. That's usually for like if you have a tractor trailer, your purchase price date, MSRP. And again, there's a full description at the top of the code. So in case you don't remember, if you are in that situation and have any of those things to declare. So code 10 is only on the long form. If you have the short form, which most businesses have the short form, code 10 is only on the long form for manufacturers. It's for machinery and equipment for industrial manufacturing. I'm sorry, it's for non-exempt equipment. My bad. Tools, dies, jigs, patterns are examples of things that are not eligible for an exemption but are manufacturing equipment. I don't think we have any manufacturers here tonight, so I'm not going to go into the manufacturing segment of that. But code 13 is only for manufacturing that is exempt equipment. And then I have examples of that. Exemption forms must be complete and include itemized details. Farm machinery. Farm machinery that's used in the operation of a farm is eligible for an exemption. Examples, tractors, harrows, hay rakers, corn choppers, milk machines. Oops, I did not mean to do that. So there is a form that goes along with the farm machinery that would also have to be completed and signed. It's a separate form that needs to be completed and submitted with your declaration. Code 18 are farming tools, and they have an exemption up to $500. There's some examples of farming tools. So as you can see, some of these codes are not going to apply to everybody. I skipped 16. Oh, no, I'm getting to that. I'm not doing them in order. I'm kind of skipping over some of the boxes that aren't for everybody, but they're on your form. And then we'll do a deep dive on the ones that everybody uses. So code 19 for mechanics tools are only if you are a mechanic. And those are exempt up to $500. Now we'll talk about code 16, because this is something that most every business is going to complete that code. So code 16 encompasses a lot of your tangible assets and equipment, virtually everything that's physically movable. The leasehold improvements we talked about earlier are usually included in code 24, and your computer equipment and software would be code 20, but most everything else goes here if your business doesn't fall under any of the exemptions. So as you can see, we've got a list of some examples here of furniture, fixtures, and equipment. There's some more examples for different types of business, your ladders, scaffolding, tables, file cabinets, partitions, display racks, coolers, freezers, kitchen equipment. So code 20 is the other thing that a lot of businesses are it's going to be very common for businesses to be filing. This is going to be your computers, your laptops, printers, and any peripheral computer equipment. Any other computer-based equipment acting as a computer, like your copiers and printers. These all go under code 20. You might notice it has a little bit of a different depreciation schedule because they depreciate a little bit faster. So bundled software is also taxable and should be included with your code 20. What is bundled software? Bundled software is software that's sold together with hardware, other software, or services at a single price. For example, your Windows operating system that comes preloaded on your computer at purchase. A golf simulating machine, the computer, the screens, all the equipment work together as one package. That would be bundled software. A dental office that has software that works with the specialized tooth cameras and the X-ray equipment, that's a software bundle. Those are some examples. If you're not sure, you can send us an email with your specific situation and we can help you determine if your software is bundled and should be included. Code 24, other including leasehold improvements. So any other taxable personal property that we didn't already mention or which doesn't appear to fit in any of the other categories that we mentioned, salon sinks and stations, cabinets, counters, partitions and cubicles, signs, billboards, light fixtures, these are all leasehold improvements that are not part of the real estate. Code 23, your average supplies. This is the average monthly quantity of supplies normally consumed in the course of business. This code doesn't have to be broken down by year. It's an average monthly or yearly total. Your office supplies, cleaning supplies. If you're a mechanic or plumber or carpenter, you might have rags, booties, gloves, flux, Teflon, sandpaper. Those are the kinds of things that are items that you use up during the course of business. Also, inventory is not taxable. If you itemize it on your customer's invoice, that's inventory. It's not part of your supplies. So on our website, and I think we have them here as well if you wanted to look at it, we have this personal property code form. So if you wanted to kind of have an at a glance to see what all the codes represent, we kind of give a brief explanation with some examples. This form is on our website if you want to use it. You can print that from our website. It's called Asset Worksheet. The back of this also has a template for like the spreadsheet that I've talked about with tracking your acquisition and disposal dates. So I think it's always a good idea, especially if you're a new business, to keep a spreadsheet where you're tracking the date that you acquired something, what it was, what you paid for it, including installation fees, et cetera. And then keep a column available for your date of disposal. You might have something for years and not dispose of it, but eventually, if you want to dispose of it, you should make sure that you put it on your disposals list. So keeping a spreadsheet like that, we have the template of that on the back of this form. You can take a look at that here as well. I think Terry brought some for examples. I think that's a really good form to make it easier to remember what stuff that you put in which boxes. So we'll go through a step-by-step. Am I going too fast? I know you don't want to be here all night, so I'm kind of trucking along, but you can always go back and review this at your own pace. So a step-by-step guide to filing. We're going to take a look at the long form just briefly. I think most of you have the short form, but for anybody who does have the long form. So this is what the form looks like when you receive it in the mail. And in the top right-hand corner, you'll see the unique ID of the business, the name of the business, and the address. This shows the affidavit of business termination, move, or sale. So you'd want to include a bill of sale or whatever your sale document was if you sold your business. This is on the front of the form that we talked about. If you go out of business for any reason or transfer ownership, this is your way of letting us know so you don't continue to get that personal property sent to you or get a penalty for not letting us know. So page 3, we want you to just answer all those main questions up at the top that we talked about: name, address, email, really helpful if you use email. Phone number in case we have a question about your form and we want to reach you easily. Then we have the lessor's listing report. So this is, most leasing companies will have an attached spreadsheet with details of items leased, the terms, the location of leased equipment, et cetera. That's really only if you're a leasing company that you would list the lessor's report. Then there's the lessee listing. So if your business is leasing equipment from somebody, you want to list here, like I lease a coffee machine and this is the name of the business that I rent it from and lease it from, and what the terms of that lease are and their contact information, so that we can make sure that they're filing, because leasing companies are the ones that would be paying for that. Not your business wouldn't pay for leased equipment for your personal property. They need to be declaring that. This is a cross-reference for us to make sure that they're reporting what they are supposed to be reporting. Then we have the disposal report, that middle section, which we talked about, right? Good to let us know when you've disposed of something, so you aren't paying tax on assets that you no longer have. So at the bottom of this, anything that you've had for over 10 years that had an original value, original cost of under $250 become exempt. And you can list those so that we know they came off of the rest of your form. So that was just recently added in the last couple of years. Page 5. This is where you're going to fill out all of your owned assets organized by code. So this is where your asset worksheet would come in handy, or your spreadsheet if you use one. You just want to total the depreciated values of each of your assets and filed by the year of purchase, original cost, which includes transportation, delivery, installation, and the sales tax. And then you want to carry that over to the depreciation box. So this is where you're going to put the current year, and then prior years are listed in each box. And then over here is the depreciated value. So the first year, it'll be depreciated at 95%, and you want to calculate that. This number times 95% with the depreciated value here. And in each year, it will depreciate more until it's down to 30%. And it will stay at 30% as long as you continue using it. So, so we want you to go ahead and calculate that as well, your depreciation. Reconciliation of fixed assets is also a section you're going to see on that declaration. This is really for your own reconciliation records. This is not something that the assessor's office is using to rely on, and it's not always going to be exactly the same as what the actual declaration is, for various reasons. We might find things that you forgot to carry forward from the prior year, so we might not have the same total that you come up with. We do use it for a reference. Sometimes we're just trying to solve the mystery of what you're missing or what you forgot to file or where you added something. So a lot of math checking. One of the things on this reconciliation is this capitalization threshold, which is something I just want to touch on. So it's an important distinction to explain to your accountant if you use one for your declaration. There's a critical difference between what you may deduct as an expense on your tax return and what you must declare as personal property. So your capitalization threshold is the total value of an asset that a company uses to depreciate the value of an asset over several years, as opposed to expensing it in a single year on your federal tax return. For our purposes, you're going to use that total cost. And if you expense it out on your tax return over 5 years and then it's gone, or 3 years and then you no longer declare it, it's not the same on our form. As long as you still have it and you still use it, you use that original cost to original owner, and it remains on, although it depreciates every year, it doesn't come off just because it's reached your capitalization threshold that is on your tax return. Uh-oh, battery is running low. Well, I don't have a cord because I'm always on the network. So, okay, well, what do we do about that? Okay, talk faster. Okay. Okay, so all right, I got through that. I have a lot of slides to go. Okay, page 7, property code and description. From page 5 and 6, you're going to total all of the amounts from all those boxes, and you're going to add the values and put the totals in their codes. Don't worry about that column on the right. That's going to be for the assessor's office purposes only. At the bottom, this is where if you had any exemptions, a lot of these require separate forms, and this is where you would check off that you've included an exemption. So you would check that, include your exemption form, and submit it with your declaration. This is where you sign and date the form. Really important.
We'll continue talking.
Okay.
Just talk faster.
If you have a designated agent that's submitting the form, they would sign on the second part. Anyway, this is, just went away for a second. Okay, we good? I have power? Okay.
Let's see if you're.
Okay, so also here's your checklist right here. So you sign up here, date here. This is your checklist to make sure that you've completed everything. If you have some special circumstance with your business, or there's something that you really think that we need to understand about something you filled out, this is a notes section. You can kind of tell us whatever that story is, and that sometimes really helps us to understand something that you completed on the. We look at a lot of these, so it's really helpful when we have an explanation of something. Short form, which is most businesses receiving the short form declaration. So code 10 and 13 are not included. They're for manufacturers. Code 24 is split into A and B. So A is other goods like the leasehold improvements that we talked about, and B is rental entertainment mediums such as video games, DVDs, CDs, that type of equipment. Code 9 is only present at the back, like on the summary sheet, but you still have a code 9 for those unregistered vehicles. Please use the checklist on the back of the form to make sure it's complete. Why this isn't forwarding. Eliminating multiple back and forth communications is way more efficient. So please try to get it right the first time. It helps you, it helps us, and helps us get through big piles of declarations a little more efficiently.
Check off sheet on the front of the form, not the back of the form. Here.
It's on the front of the form? On the short form?
Yeah. FYI.
Okay. All right, my sample that I have was on the back of the form. Okay, so it must be on, yeah, I have the long form here, so it's on the back. You're right, on the short form, it is on the front. Excellent observation, thank you. Okay, so remember our businesses that we talked about? Jack had only online presence and uses his computer and cell phone to operate his business, uses that for his personal. Do you think he still needs to file?
Yeah.
He still needs to file, right? Jill said her business isn't profitable, so she shouldn't have to file. The carpenter who said it's all his dad's old stuff. Yeah, Melanie, the hairdresser, rents a chair. Yes, they still have to file. what if you can't file in time? What if you don't have all of the information? If you have if you don't have all the information, that's not a great reason for not filing on time. We send these out in September so that you have plenty of time to kind of gather the information, ask questions. But an extension is possible if something happens. If your bookkeeper left and now you don't know where all this information, how to compile it. There are different circumstances that we do grant an extension. So I was on vacation, not good cause. I didn't receive a declaration is not a reason to get an extension. We send the declarations out as a courtesy, but they're always available online during the filing time. So that is not a reason that we would grant an extension. But if you did need to ask for an extension, it has to be requested in writing. We do take requests by email. So that would have to be in by November 1st. And if you don't get a response, don't assume that your extension was granted. You would get a response for that. Audits. The assessor is authorized to audit declarations within 3 years of the date of the required filing. There are substantial penalties applicable if your audit reveals that property was not declared as required. You can appeal. We send out a notice of assessment in January to let you know what we've come up with for your personal property assessment. And, then you want to look at what you filed and see if that lines up. And if there's some reason that you don't think it's accurate, first of all, you can call us and say, why is it not the same? And we'll probably have an explanation for that. But you can appeal if you disagree with the assessment. And appeal forms are available on our website, of course, and in our office, and they're due annually by February 20th. They hold the hearings in March, and you want to submit any documentation to the board to consider your appeal. So back to those important dates. Due date, November 1st. Granted extensions are due December 15th. If you don't file by November 1st or this year, November 3rd, you'll have a 25% penalty. If you don't file at all, the assessor has to estimate your assessment of personal property assets along with adding the penalty. We don't like to do that. Best practices. Please don't write no change or same as last year on your form. That will not be accepted. It will be considered incomplete and you will get a penalty. If you need assistance or clarification, we're a phone call or an email away. Please don't wait until the last week of filing to ask for help. If you claim your personal computer on your federal tax return as a business asset, you need to put it on your declaration. This goes for all business assets. If you still have questions, we can help you. personalproperty@manchesterct.gov, or our phone number is here. You can always give us a call. So I could go through a sample business if you wanted to practice filling out a declaration for a phony business. It does take a little bit of time. I think it's already like 6:30, so I'm trying to not keep you here all night. Does anybody want to go through this exercise, or do we have? Yes.
Question. So
Sure.
If you're a new business owner
Yes.
and this is your first year filing,
Yes.
you need to go back and remember what year you bought your desk, your chair. And what if it was like, I get an antique desk, so you just.
Yeah, I'm going to say just estimate, but estimating it should be original cost to original owner is what the guideline is.
Okay.
It's free.
Yeah.
Original cost to the original owner. So somebody paid for it and, gifted it to you, or you picked it up on the side of the road. I mean, we're going to put a value on it. I get that, we get that a lot, but it's in use, it's worth something.
What if you bought it at a secondhand place and you paid $15 for it?
Yes. You're gonna, like the example of the antique desk, you're going to estimate the original cost to original owner. And again, if it's something like that is going to be back in your prior years, so it's going to be at the lowest depreciation typically for something like that. And again, I don't make these statutes. This is just what my job is. So I didn't make that up.
It's worth nothing now. Like I'm in the same situation where I'm using a very old desk that I would have to junk if I moved it.
Right.
Because nobody would buy it.
Right.
So the value is zero.
It's not zero if it's in use. If it's in use, it is still valuable as it's usable. That's what my guideline is that I have to follow. So.
It was purchased in the 1980s.
So it'll be at the least depreciation on our depreciation schedule. Yeah. Yes.
This is really quick, and I think so many people do. If you just have your cell phone as your only equipment, because you might go out of the house if somebody calls you for a quick service, but if your cell phone is your only equipment, and let's say because you have a website, are you counting the website?
Yes.
Is it a free website?
Well, we assume that you have a computer to manage a website. And a lot of people do all of that from their phone now. Yeah. So certainly you would have to declare your phone at the very least. Yeah.
But not the phone service.
No. No.
But you did say the software with the phone, but the software comes with it.
Well, software bundles are a little bit different from what you're talking about.
So just the cell phone, and you had an app or a website, you don't, because the website isn't, okay.
Right. Apps are not something that you're going to declare. Right. Okay. Does anybody want to go through an exercise of completing a phony business declaration to see if they can successfully complete a declaration? But you probably brought your real declaration, right? We have copies if you wanted to use a copy. Yes, sir?
Okay, so, two questions. One, you're taking over, within the infrastructure, the items that are there that you're using, but you have no knowledge of the original costs. Are you now supposed to sort of go on a marketplace setting and identify what's the potential cost of that?
Sure. Okay. So I don't know what type of a business that you have, but for an example of like a turnkey business, like a convenience store, let's say, you come in and all the shelving is existing, all the displays are existing. You're coming in and you didn't buy any of this stuff, but now it's part of your business. That's going to depend on what it says in your lease agreement. If your lease agreement says that this stuff is all owned by the landlord and you're just using it as part of your lease, that landlord has to file personal property for that equipment that you're using in your course of business. Even though it is for tenant use, if it states in your lease that the landlord has provided all of this to you, and should you decide to leave, all of that equipment still stays with the landlord. The landlord is the one who should be filing the personal property for that type of equipment.
And if that's not the case, so it's made available to you, it sort of was left there, but it has use.
Okay, well, if you're using it in your course of business, then it is now yours.
And how do you put the valuation on that?
Yep, same as I explained with the other items. You're going to estimate. There's a lot of ways to estimate. I mean, it's pretty easy to, if you're in a business that you're using shelving, you kind of know like, wow, if I bought that new, it would cost this, but 20 years ago, that shelf cost that. So, it's pretty easy. And there's a lot of online tools to estimate the cost of items like that as well.
Just a follow-up question. Now, the assessment is a look back, so you're saying it's from 2024 to October 1st, 2025.
Yes.
If you have not officially started the business, therefore you're still in the process of getting the infrastructure
Yeah.
in place. What does the look back entail? Whatever you have purchased so far between.
So in that case, what I would do is go ahead and itemize what you've acquired to get your business up and running and put the dates on it. And then on that notes section on the back, say, listen, I'm not opening until December of 25. These are the items I acquired during, my startup. This is, the stuff I've invested in so far, but I'm not open for business. Yeah. Yes.
If you file before and you go into the website to do this again, is there the same as last year button that you can just press?
No, I don't think there is. Terry, is there same as last year button if you file online?
Well, kind of, if you just hit enter, if you're not entering in any kind of.
Yeah, if you don't have new assets to add, it's already carrying over your new stuff, see? So, yeah, see, good idea to file online, isn't it? Yes, we love that. Yes, I'm sorry.
You said on code 9, it's for all unregistered vehicles.
Yes.
If you have a trailer that is registered with the state.
If it's registered, it doesn't go on your personal property, you're already paying like a motor vehicle tax on that.
Okay.
Yes,
And
we don't want to double dip.
Do we have access to a copy of slides for this?
Yeah, they'll be available on the website, so you can definitely go through those at your leisure.
So if I do not plan to purchase anything to make money before November 1st when this is due, how would I is there a not applicable to everything section? Because I haven't purchased anything in pursuit of making income,
Okay,
and I don't plan to until December, but this is
Okay.
due in November.
yeah,
So.
so you don't have anything yet.
Correct.
You're just in the planning stages.
I have
so-
an LLC, and that's why I got this.
Got it. Great. So, yep, on the back, you're just going to put that in the notes.
Okay.
I am just getting started. I haven't acquired anything. I'm still in my planning stages. Sign it, date it, and we'll know that you don't have anything to report this year and to keep you on to send it to you next year.
Awesome.
Yes.
One last question. Does every town have a declaration of personal property?
Yes, and it looks exactly like this. Yes, it is a mandated form for everybody and every town does have it. Yes. Yes. Okay.
I have a question.
Yes.
As it relates to the depreciation of the assets, in the prior year's line, that balance will go down only if you dispose of an asset?
Yes. So everything kind of stays at that 30% or 20%, depending on which box it is, right? Because some of them have a little bit of a different depreciation schedule.
Where you keep adding
But-
to it as you keep adding years?
Yes, as you keep adding years, it kind of, everything bottoms out at that prior year's spot, and it just kind of builds up in there as time goes on. But as you dispose of assets and you put things on that disposal list, if you want to say, listen, in 2015, I purchased, this computer or something. Who has a computer from 2015? That was a bad example, but you know what I mean. So yeah, you would want to just subtract that from your prior years and then put in your disposal list. I took this from code 20. This was a computer. I paid $1,500 for it. I disposed of it on July 3rd. Like that's kind of, the format you want to follow so that we understand where we can follow the math.
Right,
Yes.
thank you.
I have a question where the form asks for a number of employees.
Yes.
We should be adding, if we're just a one person LLC, we should be counting ourselves as the one, correct, not reporting 0.
Yes, I think that you would just count yourself as the one. That's fine. Yeah. Yes. Okay.
Yeah, I just want clarification like that.
Yeah.
Really, so you're the one employee.
That is really just kind of, it's just kind of a data point. It doesn't count towards, your tax or anything. It's really just kind of a data point. Just kind of tracking what size of a business that we're looking at.
Because I've seen other how they tax other things, and sometimes they think the owner and like an employee, like if this was 2 people working, and then you said, well, okay, I'm the owner, you're the employee. so that it wouldn't get confused with having the owner as the employee, like this maybe a designation to,
Potato, potato.
if someone get arrested for roster.
I promise no one's gonna be arrested for how many employees. Yeah.
Quick question on what code to use for something. If we have a laser that we're using to create a product, would that go under electronics or would that go under equipment?
I would probably use it for electronics because I'm gonna guess that it is also connected to a computer system.
Kind of a peripheral.
Right, I would consider that a peripheral or computer equipment, yeah. Yes,
On the short form, there doesn't seem to be enough room to put, all your items.
right, so you're not putting each item, right? You're putting the total of items for that year. So you'll see that the box will just have a year. It might say 2022, 2021. So you're gonna take the total, like code 16, everything that you purchased in 2021 up to October 1, 2021. Between October 2nd, 2020 and October 1st, 2021 would go in the 21 box. So it's a total. We don't get the itemized listing of all of your assets. You keep that for your own records. We just have the totals, but we just suggest that for your record keeping so that you remember what you recorded where and can record your disposals accurately, that you keep kind of a spreadsheet or a tabulation of that record. But we don't keep that asset listing. We just take the totals for each year. Did everybody understand that part? Okay.
One
Any-
additional question.
Yeah.
Where it asks for the square footage, it wouldn't raise flags if the square footage is reported as zero, especially for a business that is primarily a web service.
Right. If you just have an online presence and you don't have like a physical retail space, that's not uncommon. Yeah. Yeah. There's no wrong answers on that page. Yeah. Does anybody want to go through an exercise of being a sample business? Do you have sample sheets? Not enough? So I don't think we got a lot of RSVPs, so I think we were expecting a little bit less people tonight. But this is a great turnout. I really appreciate you all taking the time to come out, especially when the Red Sox and the Yankees are playing right now. Sorry about that you're missing that. It's only the first game of the series. It's fine.
It's not sports ball.
Sports ball.
The banana ball, that's an interesting one to watch.
Yeah, I haven't seen that, but I've heard about it, so I'll have to check that out.
HBO, you can catch them, watch the replays and whatnot on HBO, but that was interesting. If baseball was like the banana ball, I'd actually watch baseball.
Oh, that's funny. We'll have to check that out. It'll be the wave of the future.
Yes. I mean, come on, some dude pitches on stilts.
Oh, that sounds fun.
Yes. I don't know if you're interested, but.
Oh, thank you. I don't have my glasses on, so I could barely see that, but thank you. Yeah, so Terry's handed out some phony ones if you want to use that for practice. If you don't want to hang out for this, it's totally fine. I think it's a good exercise to kind of just see what we do. But if you don't want to hang around for this, I totally understand. So, so this is the sample business. I just listed, well, let's see. Because we don't have a prior year declaration to compare for this practice example, we don't have a place to subtract the disposals. But to get into the habit of recording a disposal, we've included them here. So remember that you don't add or include disposed assets in the code boxes anyway. So I'm just kind of showing you like, this is the year I acquired it. This was the original cost, including transportation and installation, the item description, which code box that you put it in, and your disposal date.
So just a question.
Yes.
So, what is, an observation?
Yes.
The items that were purchased in 2018.
Yeah.
Will those, because the form goes down to 2019, will that start on prior year as a starting point for those items?
Yes.
Right.
Yes. This is just the disposals. So we're just showing you like what your disposal list might look like. But since we're doing a practice business, we don't have a prior year form to play with. So I'm just kind of giving an example of what your disposals list might look like. So on your disposals, you might have things from 2018 because they would be in your prior years section of your declaration.
So this is plus essentially a list you would have for yourself of what your assets are.
Yes.
So that you know
Yeah.
what code you put it in. And
Yep.
what year you purchased it.
Exactly. So that we can follow the math and see that disposal amount came from like your prior years for 2018. It's an ongoing list. That's why we recommend keeping a spreadsheet or, using a template like the item code list that we provide. I think that Terry brought some of those. So if that's something that you want to take and kind of follow that sample, you can do that, or it's available on our website as well. So remember, the assessment year is the prior 10/2, October 2nd, to the reporting year 10/1. So anything acquired after 10/2, it goes under the following year on your declaration. So if you bought it on October 5th of 23, it's reported on the 24, for example.
So if you looked at that like a fiscal year,
Right.
10/1/24 to 10/2/24 to 10/1/24.
25. Yeah.
25.
Yes.
Say it's fiscal year 25.
Yeah, you could. Yep. We call it that's our grand list year, and our grand list date is October 1. So from October 2nd of the prior year to October 1 current.
I'm sorry, if you could just go back because are you saying that entire list is a disposal list or just the items with disposal dates?
Yeah, that is a good question. So yes, just the disposal dates would be the ones that would be disposed.
Right, so-
But this would kind of follow along with that asset listing that we were talking about. So this has some of the assets listed. Here's why we use it for this list, because it does follow along with that listing, as I said. But if you have something like this that you're keeping track of, it's a lot easier to go to your declaration and say, okay, here's all the stuff I've been keeping track of since 2018. Let's add up all the things that I have for code 16 for 2018. That's all going under prior years. So that's $1,000. That's $1,500. It's going under my prior years for code 16, right? And then this is exactly the exercise that we're going to do with this list. This is my list of assets. I think I said this was my disposal list, but I haven't looked at this since last year, so sorry, I'm a little bit rusty on this one. So yes, these are going to be the things that are disposed, even though we don't have a prior year to play with for this. But these are going to be items that I've tracked on my list of assets that I have and where to report them, so that I don't have to agonize every time I get this form and have my stomach knot up, when you have to file your tax return, at least that's me. And then say, where did I put that again? When did I purchase this again? How much is that again? What did I file last year? Did I get anything this year? If you already have this running list, all I have to do is just put those codes, put these totals for these years under those codes. This is what makes it easy going forward.
Right, why I wasn't asking for the clarification was I'm seeing it as
You jogged my memory that I haven't looked at this slide since last year, so Yes, it's not the disposal list. This is the itemized asset list. Thank you for pointing that out. Sorry about that. I didn't mean to make that more confusing. Okay, so the disposed assets are reported in the year they're disposed, as we talked about, and subtracted from their corresponding code and year where you reported them on the prior year's declaration.
I got a quick question.
Yeah.
Do you only indicate things that you disposed of that in that current year?
Yes.
Or do you end up?
Well, if you haven't reported disposals prior and you're like, oh, I didn't realize I was supposed to be reporting that. Let me let you know that I disposed of that last year and
But it's
forgot to
only
tell you.
things- From year to year, it's only things that you haven't
Correct. Just
previously declared as.
I declared it last year and now I don't have it anymore. Yes, exactly. You're just moving forward. And then again, going back to your desk question. Okay. Yes, so if it has an original value of less than $250, which it sounds like the desk you're describing probably fits that, and it's more than 10 years old. This says 14 on here, but this is last year's form. If it's more than 10 years old and original cost was under $250, you can list that here and also remove it.
Okay.
As I said, that's new in the last couple of years, so.
Still using it?
Even though you're still using it, if it's more than 10 years old and original cost is less than $250, you can list it here to take off. Yes.
So on your first year, just list it there. You don't have to list it somewhere else.
Yeah, if it's your first year, you don't even have to list it because it qualifies. If it qualifies under that code, that's fine. But we might look at it, if you're a first year filer and we look and you have very few assets for the type of business, you might want to put in the notes, this is my first year filing. I'm using X, Y, and Z are assets that I'm using in my business, but I purchased them more than 10 years ago and their original cost was under $250. So I didn't declare them. Just so that we aren't going, don't you have a desk? Like, how could you not have a desk for that thing that you're doing? Something like that. If it's something that's going to raise a red flag that every other business that is making widgets has this item and you aren't listing that, this will kind of, if you don't want to list that there because it's a brand new filing, I would just put that in the notes because then it's like, oh, well, that makes sense.
Okay.
As I said, when you tell us a little bit of a story in those notes, we can connect the dots and be like, oh, yeah, that makes sense and move on. We don't have to go, oh, I think she didn't file this right. We better add that in and estimate it for her. You're not going to want us to do that. But if we don't know the whole story and you haven't told us the whole story, or then, we can't call everybody for small things like that. It's just not, it's not efficient. So, yeah, tell us your little story on the back and then everybody's happy. Oh, so yeah, I really have not looked at this section. I'm so sorry. So that original list that we started with, if you take any of these items, let's go back to this original list. So here's what I was asking you to do in the examples. If you use that fake form and actually include this on your disposals list, so you're filling it out as if it were your items and you're filling out those disposals. And then placing these items exactly as you would add them up and place them into your form, then the next slide just kind of tells you what it should look like after you've put them in the right place and kind of sorted them into their boxes. So this is code 16, and so your total items in the left column for 2024 were 1,700. Total in 2019 is 800, et cetera. So then you calculate your depreciated value. So these numbers come from that original list of your items so that you can populate everything in the right boxes and then total it at the bottom. Does that make sense? Yeah.
So on this sheet, you do have the 2018, because I was looking at it earlier, there were 2 items. But if I'm looking at mine, and I have items that were prior to 2019, all of that goes on prior years.
Yes.
That's the,
For the 25, yeah.
okay.
Yeah. Yeah, because like this is last year's form, so it starts with 24. So all that's going to be shuffled down 1 year, right, on your 25 form that you have in front of you. So this is going to say 2019 and the 2018 is going to fall into prior years. But that's another good point. Yeah, your form that you're using to do this calculation is actually the newer form, but this is the old form. So I guess it didn't translate very well, but at least as long as you kind of get the idea of how that's supposed to go. So code 20 would have just been populated in those boxes for each of their years with the totals. So you can see we aren't itemizing anything. We're just taking the totals of the items for the year.
So your prior year's figure is gonna grow and grow and grow along the year business.
Yes, that's correct. But the depreciation on those items is going to go down until 30%. Then it bottoms out at 30%. That's correct. So I think you get the idea here. Expense supplies. And we talk about what includes expense supplies again. So you could put that in the code.
How do you figure out your average supplies?
So most people will say, okay, let me look at my Amazon account, or let me see what I spent, on cleaning supplies or toner and paper. And, what did I spend over the year? What did I report on my tax return that I spent on expenses for the year for those expense supplies? Hopefully you have some kind of accounting for what that would be. And then you're going to divide it by 12. Or you can say, what did I spend last month, and multiply it by 12. There's a couple of different ways you can do it. If you're a new business, maybe you don't know yet what that annual cost is going to be. So you're going to just look at your, what does a month look like right now?
We're still using stuff that was hanging around the house.
Sure. Sure. Well, you can estimate as a new business for your average supplies. And again, you can always put in the notes. I don't really know. I'm estimating my average supplies, and we'll use a minimum too. I think we have like a minimum of like $50 a month. So if you put $20, it's probably still going to be the minimum $50. So
Don't spend nearly that much.
right. Well, I mean,
Chips and pencils, my kids.
I love that. I love that. It's recycling at its finest, right? Okay. So in the end, this is what those would have looked like on last year's form. That didn't really translate so well using last year's form with this year's practice form. I'm sorry about that. But so that's basically the end of the presentation here. Do you have, did we have any online questions, Terry? She can't hear me. Does anybody else have any questions? Yes.
When it says assessor's final assessment total, is that from the year due?
Yes, everything on that summary sheet on the right-hand column is just for assessor use. Yeah.
Oh, okay.
Yeah. So don't worry about that column, and then we'll do the total at the bottom in case you have exemptions, what could be approved or not approved and that sort of thing. And we like to check everybody's math, and we have a whole process like that. But yeah, we'll complete that part. And so you just want to pay attention to what your assessment notice says when you receive it in January and see if it jives with what you submitted. And if it doesn't, give us a call and we'll figure it out, right? And if you didn't like how it ended up, you can also appeal. But, generally, if you filed and you're following the instructions and you filed to the best of your ability, it should come out the same. Yeah. Any more questions?
What's your first name again?
Tammy. Tami.
Thank you.
Terry, did you have any questions from the online?
No.
Okay, perfect. Well, thank you so much for your time. Appreciate you all coming out tonight. I hope you learned a little something, and feel free to give us a call, shoot us an email if you have any questions.
Thank you.
Nice to meet you finally. I feel like I know you. I feel like we
I
know.
know.
You're such a nice